All right, we're going to continue to monitor the first day of Fed Chair Powell's testimony on Capitol Hill. No big surprises today, really underscoring that the Fed is in no hurry to cut rates until it can assess the impact of the Trump tariffs on the economy, very similar to what he said at the Fed meeting last week. We bring in now our senior economics reporter, Steve Liesman. That is the news of the day, that there's no new news. Although I have to say, Steve, Chair Powell pretty explicitly said that if not for the tariffs and the uncertainty created by them, the Fed would already be cutting. Is that your takeaway here?
Yeah, I think that's a pretty widely held belief on the committee, Scott. Look, I don't think he really changed his tune from last Wednesday, maybe loosening up a bit the harshest possible hawkish view. But he didn't say the door was closed for the summer, but he basically said it's not his intention to open it. In fact, Scott, if you mind, I've got one quote here I want to run from him, if it's there, about him talking about the idea of tariffs passing through that I think summarizes the last 3 hours, if you can run it.
We think we should start to see this over the summer, you know, in the June numbers and in the July numbers. And if we don't, I think we're learning here. If we see less pass-through, there aren't historical experiences we can consult here, really. So it may turn out that the pass-through is less or more than we think.
There you go, Scott. Less or more than we think, and he's just going to hang out. And look, I think we are hearing, more importantly, Scott, that there is support for his position. We did hear rather plainly from Waller and from Bowman, but also we have several other Fed officials, Hammack talking, Bostic talking, and really supporting the idea that the Fed needs to wait and see what happens with tariffs and inflation.
Are we setting ourselves up for a pretty good battle inside the room, Steve, as the next meeting approaches, given the very public disagreement, I think is a fair word, on the views of the folks you just cited with some others?
It could be, Scott, but I just don't know how people are going to react. Let's say that and I have no idea if this is going to happen, if the June inflation numbers come in at 3%. The case of those who want to cut is going to be much weaker. If it comes in lower, then you will have either a fight or a lot of acquiescence on the idea. So, Scott, just write these dates down. July 6th, we get the jobs report. July 11th is inflation. July 9th, the president decides on the reciprocal tariffs. The Fed meets July 30th. So don't take too much time at the beach, my friend.
No, you're the one who has to be on duty. We'll do accordingly, but you're the one who's in trouble. Steve, thanks. It's Steve Liesman. As I said, Steve's going to continue to monitor all of this. And, Steve, please do come back and let us know if there's anything that we need to know. But you see the markets here, and that's what all of you need to know, that we are now, this is the highs of the day for stocks. We are 1% away on the S&P 500 from a new all-time high. And the market has crept higher ever since word of that ceasefire out of the Middle East came through earlier today. And we're holding these levels. It's very interesting. The investment committee is with me today, too. Josh Brown, Joe Terranova, Stephanie Link, and Carrie Firestone. Joe, I'll give you the ball first. Nothing new there, but very much new in the market. I mean, we're not that far away now, and we continue to creep higher.
No, and I think the trajectory points towards we will achieve new all-time highs relatively soon. I think the chairman did little to disrupt what already was a very favorable and optimistic mood coming into the opening of trade today. I think markets are beginning to understand, based on his comments, September 18th for me is the date. I think in July 29th and 30th, you'll get some dissension surrounding whether they should cut. I think they'll be cutting by September 18th because I don't think you're going to see the inflation that everyone's talking about showing up in those readings. So the market continues to drive higher. I use the word resiliency. I will use that word over and over again because this is one of the most resilient markets that I have ever witnessed.
Steph, so yields were being closely watched today. They were higher. They're lower now, I believe. Oil prices continue to fall. Consumer confidence was a miss at 93 versus 99.5. UBS today says the fundamentals remain supportive, even with the Middle East and what's going on. Wolf Research poised to reaccelerate to make a run at the highs. Is that what you think, too?
I do. And I think I go back to the economy overall. You're running at 3.4% now for the Atlanta Fed tracker for the second quarter. Just go back and read the transcript from Carnival Cruise and what the CEO said about the consumer. It's strong. They actually beat expectations. They raised numbers. Bookings for next year are going to be similar to this year, which were a record. So the consumer continues to do well because they have jobs, they have better wages, inflation is coming down. But I did take away the same that you did with regards to Fed Powell, because if it wasn't for the tariffs, they actually would be cutting. That's like really big, actually. Like maybe he actually does get it.
No, he gets it, but what's he going to do? He's in this paralysis like many others have been because they just don't know, and they don't want to make a mistake.
Of course they don't want to make mistakes.
They don't want to cut too early and then have inflation reemerge as a result of the tariffs and then have to react to that and then look silly and also create bigger problems than probably it's worth. What's your thought, Kara?
I think it's very interesting that the groups that have done really well this quarter to date, which are technology, consumer communication services, and consumer discretionaries, which are really the big Mag 7 stocks. It's Microsoft, Meta, it's not Apple, but it's Tesla for sure, NVIDIA, et cetera. That has driven the market. And these, for the most part, I mean, not really NVIDIA, do not require, they're agnostic about tariffs except for NVIDIA. And
I'm sorry, Kara, I'll let you continue 2 seconds. Give me a 12 months, please, of the Qs. Let's take a look at that, because that's like 0.3% from a new all-time high for the Qs. It goes with what Carrie's saying.
Yeah.
Forgive me, but I wanted to put that up, and you continue, please.
No, it's exactly true. We've had a year. The year to date had the defensive names like consumer stocks and then some cyclicals, industrial and financial. That's strongest year to date, but the tone of this market has changed, and it feels very much as if we've got a runway, at least over the next month, for the big tech and digital giants to lead the market higher. And you need them, I think, to get to the new high. And that's, it doesn't take much.
You're getting a bigger buy-in, if you will, Josh. The biggest equity inflows in 7 weeks, according to B of A and their client flows. More tech buying as well. We have the tech sector hitting a high for the first time since December. So this is game on for that trade.
It is, and one of the things that I keep returning to is just like, if you're paying attention to stocks and not just the stock market, then you understand exactly why we're approaching highs at this point. We've neutralized the worst of what we thought would happen with the tariffs. Now we seem to be getting a little bit of a handle on the geopolitical risk, and the market has rendered its verdict, which is LOL. And look at the stocks that are going up. To Carrie's point, the NASDAQ 100 is 0.09% away from all-time highs, not 52-week highs, all-time highs. Within the S&P 500, 67% of the technology sector stocks are above their 20-day moving average. These are micro bull markets within macro bull markets. 78% of tech stocks are above the 50-day, 56% above the 200-day, and those numbers are climbing. About 9% of S&P tech names are currently at 52-week highs, and the XLK overall, the sector overall, the RSI is about 70. That bull market is the most important bull market to what the average does, to what the index does. We all know that. What's the second most important? Financials. Here is a sampling of companies that are within 5% of their 52-week highs right now. Bank of America, Wells Fargo, Morgan Stanley, Goldman Sachs, JP Morgan, Citi. You have not seen a market top where all of those names are within 5% of their highs. Those markets tend to persist. And even away from the big banks, look at Coinbase. It's the best performing stock in the S&P financial sector year to date. It's up almost 40% on the year. And it wasn't exactly a low-price stock heading into the year. So when you have financials and you have tech doing what they're doing, that's like, I don't know, 40% of the market cap of the S&P. That's really all you need to understand about why we are where we are.